The person asking the question says, I own 100,000 in Microsoft stock. Should I switch up what I am doing? And the detail says, it was a gift purchased for me as a child by my mom. I currently have an investment opportunity to purchase an investment property in Florida with my sister-in-law. My family's been in the real estate and rental business for years. Feel confident in the ROI with the Florida house, but Microsoft, bought by my mom. LOL, the second I sell, you know it's going to jump to $1,000 a share. Thoughts? It's a very interesting. What a blessed position this person's in. Clearly, to come from a privileged background where their family is investing in real estate and they have 6 figures in one equity position in Microsoft, right? I would say most viewers are not in this position. So bravo, congratulations. There are no wrong answers. But Microsoft today is the largest company in the world, right? Apple and NVIDIA have kind of given up that title to Microsoft. And a big reason Microsoft is the biggest company in the world by market capitalization is because of AI. And so Microsoft's 49% position in OpenAI, which owns ChatGPT, which is the brand name across enterprise and consumer today for large language models. You know, considering that Microsoft is a $3 trillion company, it sounds like a lot. We didn't even believe there was going to be a $1 trillion company not many years ago. But you could imagine that just OpenAI alone could be worth $1, $2, $3 trillion. So I think long term, and this question seems to be coming from someone who has a very long time horizon of 30, 40, 50 years ahead of them. I definitely would not touch that $100,000 position, especially since it's accumulated value since they were a child, right? First of all, you don't want to pay the taxes. But most importantly, you've won the lottery, right? Microsoft could have gone the way of so many other companies over the years that lost their luster and were disintermediated or just replaced by new technology, right? And there were so many opportunities, right? Microsoft Word and Microsoft Excel. It seemed like that was all the company was about. And if that was it, Microsoft was gone. But Microsoft got into the cloud and Microsoft got into AI and Microsoft continued to evolve its leadership, right? So it didn't end with Bill Gates. Bill Gates passed the torch and today you have brilliant leaders leading the business. And they're so diversified across technology for the enterprise. And obviously they own things like LinkedIn for us as consumers as well. I would say that that's a great building block for a long-term portfolio. Now, there's nothing wrong with investing money in real estate as well, especially when your family has a legacy of knowing what they're doing with real estate. I find a lot of real estate investors really believe that this is the only way to build wealth. And I think that from a diversification standpoint, it's a big mistake. Overall, the stock market has been a much greater wealth creator than the real estate market. Now, the real estate market may have done it with a little bit less volatility, a little bit more tax efficiency, sure, but there is no wealth creation engine like the stock market, and especially the American stock market. If you look back 50 years, and probably if you look forward 50 years, I don't imagine that Microsoft is going to be it's not going the way of the buffalo. So I think $100,000 based on what I can imagine for this individual that has, a family real estate portfolio, $100,000 probably isn't an enormous investment relative to their overall wealth. And so I would leave that alone and continue to learn more about how to build a proper diversified portfolio for the long run. And so as you make money over the next 10, 20, and 30, and 40 years, that you can build a properly diversified and growth-oriented portfolio alongside your family's real estate business, which is, again, a wonderful thing.
Yeah, should you have savings and how much in savings? And it's all so dependent on your situation. I think if we're talking to someone in their 20s, I think savings is probably like the most useless thing that we could possibly have as a 25-year-old, because we can assume that you're in your first career, right? Your first job out of school, or maybe you didn't go to school and you're still working your first job. Any savings you have should be invested back in yourself. So hopefully if you didn't go to school, you're saving up and that money is going to pay for education. Right? If your parents aren't picking up the tab, there's absolutely no reason for money to be sitting in your bank account. And if you have extra money sitting in your bank account, hopefully it's being invested and not saved. But even investments at that point, you're much better off investing your funds into yourself. And so you've got to figure out sort of, are you entrepreneurial or are you not entrepreneurial? And if you don't have the skills and the desire to be entrepreneurial, that's okay. That's fine. But you can still invest in your career. So even if you're working at a large company, there's a good chance that there's a way to level up in what you're doing. So a lot of people that work in finance work to take additional tests, whether that be the CFA or the CFP or something like that. And if you're working in science, generally, most high-level positions in science are reserved for PhDs. So again, if you're stuck with a bachelor's or a master's, you're going to hit a ceiling. And unless you're working on the business side of life science or biotech, you're not going to get as far as you want to get. So, in your 20s, education is really where your savings should be going, right? There shouldn't be money sitting around. And if you're not trying to be a traditional career-oriented person, you want to be more entrepreneurial, that money should be going into building your business. And there are no mistakes that are fatal in your 20s. And if you're somewhere in between, because a lot of us are, right? There's nothing wrong with saying that I'm not exactly sure if I'm an entrepreneur or I'm a career employee. What if I want to be something in the middle? That's a wonderful point of view. You can explore finding people who are in your orbit, in your network, who are entrepreneurial. And you know who those people are. They're outgoing, they're salesy, and they take risks. So if you find yourself somewhere on that spectrum, because it's not binary, it's not a 0 or a 1, you're not 0 or 1, right? You're somewhere on the spectrum. So if you're somewhere in the middle, pair up or join a group of people who are doing something interesting. And I think there's nothing more important today, and I would give this advice to my kids, than finding people who have the attributes that you think you lack and cooperate with them. Because great companies today are not going to be created by one individual, no matter how much I hear about like the first VC funded billion-dollar one-person company. For some reason, that's a very popular thing to talk about right now in the VC world, that there's going to be a company that's valued at $1 billion that's like one person. Again, when you find yourself in the middle, somewhere on that spectrum of between career and entrepreneurship, find the people that complement you and that you enjoy building ideas with, and go and do the thing. Do not stick around and forget about taking risks in your 20s. Now, by the time you're in your 30s, you've got kids, you're in your 40s, you're mid-career at this point, these things become near impossible to do. And so should you have savings when you're in your 30s and 40s? Yeah, absolutely. Because you should be investing in a life insurance policy to make sure that if you get hit by a bus, your kids are going to be okay and your wife's going to be able to pay off your mortgage. And you need to have some kind of savings fund, because guess what? People get laid off all the time. And so if you're working for somebody else, if you lose your job, you better be able to float your family's expenses for at least 6 months in today's world. But more and more, we're seeing the idea of a career sort of morph and change and really erode. So you see today that the college education is becoming worth less and less unless you're attending, one of 50 universities. And then you're seeing the career that you're entering, unless you're studying a profession like becoming a physician or an attorney or an engineer, most other folks are entering a world that no one has ever experienced before. And that world is, first and foremost, not tied to an office. So like never in the history of the world has work been done in the distributed way that it's being done right now. It's just never been done. We don't even know. This is an experiment. I think it's going well, but it's an experiment. And then you have young people entering a working world where AI is competing for their jobs. Like imagine how much AI will be competing for your limited, tiny set of skills in the next 5 years. So what that tells you is that nobody's going to care about what you learned about economics 101. They want to know what you learned in the internship you got between your first and second year and your second and third year and your third and fourth year. And that work experience will become way more important than anything you did in class. Because before, companies had the luxury of saying, we're going to buy you, John Smith, as a student, your potential. I think AI removes a lot of this desire to buy potential. It just won't be necessary. So if I don't have to buy your potential anymore, I'm going to buy a sure thing. Amount of dollars to buy potential. I'd rather buy AI. And so if you don't want me to buy AI, then don't come with a resume, don't come with potential. Show what you've already accomplished. And that's a heavy load on society. I don't know what that means for the next 5, 10, 15, 20 years. I don't know what it means for our kids in 10 years when they graduate from school. I'm a little bit scared for them. I think we had a much easier, more defined path to follow. And I think that this is just getting a lot more complicated. And it doesn't matter. I mean, I brought up doctors and lawyers as if that's some sure thing. If you're a radiologist, what do you think AI is doing to your job? Do you think AI can't read a x-ray? Oh, it sure can. And same thing with attorneys, right? AI is going to do a lot of the work that junior attorneys get paid a lot of money to do today. And so what that's eroding is not the work for the top 1%, right? You're still going to need those superstars that are going to go to the top firms that bill at the highest rates, the doctors that are doing innovative procedures, but it's going to further erode the middle, right? What is the middle? There is no middle. There will be no middle. And so it's like the elite and the lower 80% or 90% of humanity. I think that we're moving in that direction. And politicians want to talk about sort of how they're going to solve this problem, but I don't think this is a political problem, right? This is a snowball of technology and evolution that it's going to get to that point, and there's nothing anyone can do to stop it. Tariffs certainly are not going to stop this snowball from rolling. I think it's kind of like investing. We all have to figure out, how do we adapt to what's about to happen? How do we go with the flow? How do we make sure that we're positioned the right way and we're in the right place? And our kids are too, because we're not going to fight this trend.
What's the single best piece of financial advice you've ever received? That's like the question everyone loves to ask, because they think that someone has like the answer to the meaning of life. You know, I think that this sort of applies to everybody who's young, but it doesn't apply so well to folks that are already in their 30s and their 40s and their 50s. But the best financial advice that I think we can give to young folks is to take risks. And those risks are either going to pay off by teaching you something really, really important very early on, or they're going to lead to payoffs in enormous ways that are going to benefit you in your 30s, 40s, and 50s. And so I would say that most people are surrounded by risk-averse people. That's just the nature of the world around us, right? Whether it's our parents or grandparents, our teachers, for the most part, the average person is very, very scared of risk. And mostly they're scared of risk because they're scared of getting out of their comfort zone. They're scared of new things and they're scared of change, right? And so I think best way we can say that the majority of the population is scared of risk is that they fear change, because risk presents two opportunities, right? One is positive change and one is negative change. But they're afraid that if they experience negative change from whatever risk they took, that they'll never get back to equilibrium. They'll never get back what they had. And that keeps most of us, sitting on the couch, scared to do anything. And I think, as parents, that's like the one obligation we have, is to kick our kids off the couch and tell them to go take risks and to not follow the safe path. And so, I think it's not financial advice per se, but it is financial advice, because taking risks involves money for the most part, right? Because there are very few things you can do without investing money. So you're either investing money into a physical investment, it could be a paper investment, but hopefully the financial investment you're making is in yourself. And that could be getting an education. That could be moving to a new place for better opportunities, which most Americans are extremely afraid to do. Or it could be starting a business, which isn't for everyone. Or it could be being in the right place with the right education to get the career going that you feel passionate about.